Hi there, everybody. Tom Levitt, Broker Tom. Welcome to Investor Tips. In one of our last episodes, we talked about some of the metrics that investors in real estate use to determine what they're going to do when they buy properties. And I went through them pretty quickly, but let me zero in on one of them right now, and that is the cap rate. And the cap rate's probably one of the most popular metrics that's used. You're probably asking yourself, what's a cap rate? Well, a cap rate's pretty simple. It's the net operating income divided by the sale price of the property. Okay? Real simple. NOI, net operating income, divided by the sale price of the property. Now, you probably also ask, well, what do you mean net operating income? That's nothing more than the gross scheduled income. That's the collection of all the rents that the property earns, minus maybe a 3 to 5% allowance for vacancies, and then all of the other expenses. And the expenses would be electric, gas, power, sewage, all those things that you're paying for that the tenants aren't paying for. Okay? And it's going to be maintenance and everything else. It's going to be real estate taxes, but it's not going to include your mortgage payment. No, that's a different matter altogether. So net operating income includes those items. Are you with me so far? Okay, let's take a practical example. Garden Grove, California. 5 plus 3, that's good. 8-unit, multi-unit apartment building. Really nice place. It's well maintained. It's sitting out here, and it's offered about $1,012,000. Okay? Now, sounds like an awful lot of money. Maybe not. What we have to do is we have to look at what are all the factors that come into this property. Cap rate is the one we're going to focus on. So if we want to figure the cap rate on this, we need to know what's the net operating income of this property. Well, hopefully that owner is going to give us some good numbers. Nah, not going to happen. We're going to have to figure some. So what we're going to do is we're going to take the gross rent that they say is $107,000, and then we're going to subtract from that maybe 3 to 5% vacancy allowance, and then we're going to subtract from that the net operating income. Now, if you don't have all that stuff, the net operating income, then figure 35%. Why not? Brings the number down to somewhere around $68,000. So if you got that, you divide that $68,000 net operating income by the sale price, $1,012,000, you come up with magically about a 7% cap rate on this example that I gave you. That's doggone good. Let me tell you, in California, especially in Orange County, today investors are really, really delighted with 6 to 7% cap rates. Okay? So this property, this example I gave you is good for that. But let's also go on to another step, which is the debt coverage ratio. Complicated? No. Debt coverage ratio is nothing more than saying what you net, your cash flow coming through the property, is going to be 125% of what your debt is to pay for it. Okay? 1.25 or 125%. So if you've got, let's say on this property, you're going to buy it at $1 million, you got to put down 35%. You got a loan out there, you pay 7 some odd percent on it. You want to be able to narrow these numbers down. And I think I did a cheat sheet here. I don't want to go too far with it. Yeah, I did it so that it was a first loan of about $660,000, 7.5%. Makes your annual debt service about $55,000. Guess what that comes down to? About 1.23% or 123%. That's well within the guidelines of what most lenders are going to want to do. So I'll tell you what, that's it for today. Good luck with your investments. And if you really want to know how to crunch these numbers, you can go out and you can buy really fancy software. Don't do that. If you want something really simple, I'll be glad to send it to you. It's nothing more than an Excel spreadsheet that lets you put in all the numbers. It does the analysis, the financials, and all that. Okay? Send it to me at tom@tomlevitt.com. TOM@TOMLEVITT.com. And great luck with all of your investments. Take care, everybody. Bye.